Friends, let's start the second lecture on Finance Act 2024. In our very first lecture, that was a demo lecture, we did discuss little bit calculation, how to calculate income tax liability when an individual is getting income from non-saving source of income. So we'll be discussing now, obviously, in today's lecture, we are going to discuss income tax liability calculation in a really good detail. These tax rates which I've just written, they are given to you in an exam. How we'll apply, we will study. Don't worry at all. Once again, let's just start with a very simple example. Then slowly and gradually, we'll be introducing saving income and dividend income as well. There's a little change in Finance Act 2024 and dividend income. We will discuss that as well. Don't worry at all. Let's start from a very simple question. Assuming we know that employment income is a non-saving income. Let's say an individual is having employment income of 95,000 and you are asked to calculate income tax liability. Obviously, on entire 95,000, we are not supposed to pay income tax. First, we will deduct personal allowance. The income which is over and above the personal allowance, only that income is a taxable income. Let's solve this. Employment income is a non-saving income. Personal allowance is in Finance Act 2024 is 12,570. Taxable income 95,000 minus 12,570. Taxable income, I'm getting 82,430. Let's apply tax rates. Income tax. We cannot apply directly 40%, even though this individual is having taxable income more than the basic rate band. But the rule is, first we have to utilize the basic rate band. After utilization of the basic rate band, then we'll go move towards higher rate band. Basic rate band ends at 37,700 into 20%. I'm getting 7,540. Now listen carefully. The amount on which I have to calculate income tax liability, that is taxable income, is 82,430. Students, out of 82,430, we have applied tax on 37,700. So what are you going to do now? The total taxable income is 82,430 minus 37,700. So when we deduct 37,700 from 82,430, I'm getting 44,730, which falls in high rate band. Applicable tax rate is 40%. High rate 44,730 into 40%. I'm getting 17,892. Here comes your income tax liability. 25,432. This is income tax liability. 25,432. That is the income tax liability. That's great. Now, let's go ahead. Assuming if an individual is having non-saving income as well as saving income, then how do we calculate tax rates? How do we calculate income tax? But before that, let me show you the rates. Saving income, basic rate Applicable tax rate is 20, higher it is 40, additional rate it is 45. You can see the tax rate in the saving income, they're exactly same like non-saving income. But when it comes to saving incomes, there are few additional rules which you have to consider when you are applying tax rate on saving income. So let me just write those additional rules for the saving income. Number one, if an individual is a basic rate taxpayer, someone who is a basic rate taxpayer gets nil rate band on saving income, £1,000. How this nil rate band works, how do we identify that individual is a basic rate taxpayer or not? We will discuss that. Wait. Right now, I'm just writing the rules, then I'll explain each and every rule with application. So, any individual who is a basic rate taxpayer gets nil rate band of £1,000 for the saving income. What about an individual who is a higher rate taxpayer? Higher rate taxpayer. Someone who's a higher rate taxpayer still gets nil rate band, but now £500. Third, what about an individual who is really rich, really rich? That person is an additional rate taxpayer. Wow, 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 wow. If someone is an additional rate taxpayer, really wealthy, yeah? If someone is an additional rate taxpayer, then HMRC in UK, that is UK taxation authorities, they say that additional rate taxpayer will not get any nil rate band for its saving income. Great. Additional rate taxpayer, no nil rate band for saving income. Fourth and the last rule for the saving income. In saving income, there is one rule for the starting rate band. How it works when we apply, just wait. There's starting rate band from £1 till 5,000. Applicable tax rate is 0%. These are the four additional rules when you are calculating tax for an individual and who is having, let's say, saving income as well. So when you are applying tax rate on saving income, don't forget these four additional rules. How each one of them is applied, we are discussing right now. Don't worry at all. Let's discuss with the help of a question. Assuming we have Mr. Y, who is having, let's say, the employment income, 60,000. Wow. But he's not only having employment income. Let's say he's also having saving income, interest income. Assuming the saving income is 20,000 and the required is income tax liability. This same individual is earning from two sources of income. One is employment income and another is saving income. And we are asked to calculate income tax liability. Let's calculate. Now you have to make three columns, even though this individual is having two different sources of income, but you will be making three columns. Why? I'll tell you the reason. The first column will always be non-saving income. First column will always be non-saving income. First, you have to deal with non-saving income. You have to. The second is saving income. and I'm just repeating, saving income simply means interest income. Now there will be one more column for the total. Obviously, employment income is a non-saving income, just writing directly to save time. Saving income is saving. So 60 plus 20 gives me 80. Directly, I cannot apply tax rate. First, we have to deduct the personal allowance. Now, the question is, sir, this individual is having income from two different sources. From where we are going to deduct personal allowance. What is the rule? The rule is, first, you have to deduct the personal allowance from the non-saving income. If individual does not have the non-saving income, or the non-saving income is not enough to utilize the entire personal allowance, in that case, what happens? If an individual does not have non-saving income, then obviously personal allowance will be deducted from the saving income. Or if an individual does not have enough non-saving income to utilize the personal allowance, then the remaining personal allowance is deducted from the saving income. For example, if an individual is having non-saving income 10,000, so I'll be utilizing the personal allowance 10,000 from the non-saving income, and the remaining 2,570 will be deducted from the saving income. So it is always the non-saving income first. Personal allowance 12,570. So 60,000 minus 12,570, 47,430, 20. 67,430. Okay, now how do we apply tax rates? The rule is always first apply the tax rate on non-saving income. Even though this individual is having taxable income in the column of non-saving, 47,430, directly 40% you cannot apply. First, you have to utilize, consume the basic rate band. After that, we'll move to higher rate band. Basic rate. The limit of the basic rate ends at 37,700 into 20%. I'm getting 7,540. Great. Students, the taxable income in the column of non-saving is 47,430. Out of that 47,430, you have applied the tax on 37,700. So what are you going to do now? From this 47,430 minus 37,700, I'm getting 9,730. Logically, that 9,730 falls in high rate. Nine seven three zero into 40%. 3893. Students, we have applied the tax on non-saving. Now we'll move to saving income. Now listen carefully. Whenever you are going to apply tax rates on the saving income, first of all, you need to check individual tax paying status. Why? Because on the basis of individual tax paying status, we decide the nil rate band. Now the question is, how do we decide the individual tax paying status? It is very simple. If individual is having taxable income, the total taxable income, not from one source, I'm saying from all the sources of income, the total taxable income, if the total taxable income is more than 37,700, then that individual is a high rate taxpayer, provided that the overall income is not exceeding 1,25,140. Because if the total taxable income exceeds 1,25,140, then that individual is an additional rate taxpayer. Right now, let's apply on this question. Look at this final last column of the answer, total. The total taxable income is 67,430. The total taxable income is 67,430. By looking at 67,430, we can decide. This individual is a higher rate taxpayer. Whoever is a higher rate taxpayer gets nil rate band of 500 for the saving income. So let's apply. Nil rate band saving income. I'll go for 500. Because this individual is a higher rate taxpayer. Great. The total taxable income in the column of saving income is 20,000. From that 20, we have taken 500 in the nil rate band. So the remaining amount is 19,500. Obviously falls in high rate because basic rate band is already utilized by the non-saving income. And now listen to me carefully. If any income has utilized the basic rate band, it is used for rest of the income. For each source of income, you do not get separate bands. So like in this question, we have already utilized 37,700 for the non-saving income. Now this basic rate band is not available to the saving income because it is already utilized by the non-saving. So any source of income has utilized the band, it is not available then for the remaining sources of income. So out of 2,500 we have taken in the nil rate band, so the remaining amount is 19,500. Applicable rate is 40%. 7,800. Simply add all of them. You will get income tax liability. 7,800 plus 3,892 plus 7,540. Students, I'm getting income tax liability 19,232. This is my income tax liability. Obviously, you have to write properly. Let me write it for you. Let's try one more question. Assuming we have employment income, let's say 30,000. We do have, let's say, saving income, 25,000. The required is income tax liability. Let's say this individual is having employment income 30. Saving income means simply interest income is 25. Okay. And we have been asked to calculate income tax liability. Now, what I want from my students, just pause the video, attempt the question, and then you can obviously unpause the video. Okay. We have to make 3 columns. One is non-saving. Then we have saving income. Then we have total. Obviously, employment income is a non-saving income, which is 30,000. Saving income is interest income, 25. It is 55. Personal allowance is first deducted from the non-saving income, and personal allowance is available on per tax year basis. It is not available on per source of income. It is available on the basis of per tax year. Personal allowance 12,570. Another point, if an individual has not, if someone does not have an income, so unused personal allowance cannot be carried forward. If you are unable to use the personal allowance, it's simply wasted. Taxable income 30,000 minus 12,570. I'm getting 17,430. 42,430. Now we have to apply the tax rate. First, you have to apply the tax rate on non-saving income. Basic rate. Now listen and listen carefully. The taxable income in the column of non-saving, the taxable income in the column of non-saving is just 17,430. Taxable income in the column of non-saving, it is just 17,430. So obviously, on entire 17,430, we will apply the tax rate 20%. Let's apply 17,430 into 20%. 17,430 into 20%. I'm getting 3,486. Now great. We have dealt with non-saving income. Now we'll move to saving income. Before applying any tax rate on the saving income, we have to first decide individual tax paying status. How do we decide the individual tax paying status? Look at the last column of the answer, total. The total taxable income, is 42,430. The total taxable income is 42,430, which is more than the limit of basic rate band. The limit of basic rate band is 37,700, and this individual is having total taxable income more than 37,700. So that is why this individual is a higher rate taxpayer. And whoever is a higher rate taxpayer gets nil rate band £500 for the saving income. So let's go for that. Nil rate band, saving income 500 into 0 is great. Now listen to me carefully. Your saving income is 25,000. Out of that, we have taken 500 in the nil rate band. Great. Now the question is, we still have 24,500 in the saving income. Which tax rate is applicable? Now we have to check how much space is left in the basic rate band. Because the basic rate band ends at 37,700. And so far, I can't see that happening. It is not utilized by fully, it is not consumed yet. In the previous question, it was fully consumed. Right now, it is not fully utilized. Let's see how much basic rate band limit is left. How much basic rate band is unused? 37,700. We have used 17,430. We have used 500 as well. So how much basic rate band is unused? 37,700 minus 17,430 minus 500. Students, I'm getting 19,770. So still in the basic rate band, the unused limit is 19,770. Now, obviously, which income is going to utilize this unused basic rate band? Saving income. Because non-saving income we have already taxed. Basic rate, saving income, 19,770 into 20%. Let's see what is the answer. I'm getting 3,954. 3,954. Okay. Now what? Now we have utilized the full basic rate band limit. Still, we have saving income to be taxed. Obviously, that remaining saving income falls in high rate band. So the taxable saving income is 25. Out of that 25, we have taxed 500 in the nil rate band, 1977 in the basic rate. So how much falls in high rate? Let's check. So let's see how much how much saving income is still left to be taxed. 25,000 minus 500 minus 19,770. I'm still left with 4,730. The total taxable income for saving is 25. Still, we need to tax 4,730. And that falls in high rate band because basic rate is fully utilized. Higher rate, saving income, 4,730. Applicable tax rate is obviously 40%. I'm getting 1,892. Less 3,954 plus 3,486. I'm getting 9,332. Income tax liability, let me recheck. 3,486 plus 3,954 plus 1,892. That's great. Okay, now let's introduce one more income. How do we calculate income tax liability for an individual? Let's say who is earning from non-saving, saving, as well as the dividend income. Let's see. Let's do it with the help of a question. So far, we have not worked on the starting rate band. We will work. Don't worry at all. Assuming the employment income is 40,000. Saving income is, let's say, 30. Dividend income is, let's say, 5 or make it 10,000. Required is income tax liability. Employment income, which is a non-saving income of this individual, is 40. The saving income is 30. Dividend income is 10. And we have been asked to calculate income tax liability. Okay. Let me show you the tax rate for this dividend income. And these tax rate, again, I would say will be given to you in an exam. Dividend income. If someone is a basic rate taxpayer, Then for the dividend income, the tax rate is 8.75%. Higher rate dividend income 33.75. Additional rate dividend income 39.35. Basic 8.75, higher 33.75, and the last one is 39.35 for the additional rate. Another thing is for the dividend income in Finance Act 2024 for the dividend income. First 500 of the dividend income, actually they fall in a nil rate band. Every individual, irrespective of the tax paying status, every individual, irrespective of the tax paying status, gets nil rate band of £500 for the for dividend income. So in Finance Act 2024, the limit for the nil rate band for dividend income is £500. Every individual, irrespective of tax paying status, every individual gets nil rate band £500 for the dividend income. So dividend income, nil rate band is £500 for everyone. When we say everyone, means everyone irrespective of tax paying status. Great. Now let's try the question. Now this individual is having 3 sources of income. While solving the question, how many columns will you make? 4. 1 additional. Employment income is a non-saving income. Non-saving income. Then you will go for saving income. Dividend income. And finally there will be total. Just to save the time, I'm writing directly. Employment income obviously falls in non-saving income. Saving is saving and dividend is dividend. Total becomes 80. Personal allowance is always first deducted from the non-saving income. 12,570. Taxable income. 40,000 minus 12,570. I'm getting taxable income 27,430 for the non-saving. Saving, of course, 30. Dividend is 10. I'm getting 67,430. Now let's calculate income tax. The student, first of all, income tax rate, they are applied on non-saving. So let's see. Entire 27,430. The taxable income in the column of non-saving. The taxable income in the column of non-saving, it is 27,430. Obviously, the entire 27,430 falls in basic rate band, where applicable tax rate is 20%. So let's apply 20. Basic rate, and we are dealing with non-saving. It has to be first always. Applicable tax rate 20%, 27,430 into 20%. I'm getting 5,486. Great. Now, after non-saving, you will move to saving income, but which tax rate you are going to apply on the saving income before applying any tax rate on the saving income? You need to decide first. Individual tax paying status. Because if an individual is a basic rate taxpayer, gets nil rate band of £1,000 for the saving income, someone is a higher rate taxpayer, gets nil rate band £500 for the saving income, and someone who is an additional taxpayer does not get any nil rate band for the saving income. And tax status is always decided on the basis of total taxable income. The total taxable income of this individual is 67,430. The total taxable income of this individual is 67,430. Obviously, it is more than the limit of basic rate band. This individual is a higher rate taxpayer. Whoever is a higher rate taxpayer gets nil rate band of £500 for the saving income. Let's come here. Nil rate band, saving income 500 into 500 does not look like 500. Make it proper. Okay, now. The total taxable income in the column of saving income is 30. Out of 30, we have taken 500 in the nil rate band. Still, we are left with 29,500. How to apply tax rate on the 29,500? First of all, we have to see how much space we have in the basic rate band. The limit of the basic rate band is 37,700. Out of that, we have utilized 27,430. We have utilized 500. So how much space is left in the basic rate band? 37,700 minus 27,430 minus 500. Students, we still have 9,770. Unused limit in the basic rate band is 9,770. So basic rate, saving income, 9,770 into 20%. I'm getting 1,954. Okay. Now, basic rate band is fully utilized. So obviously the remaining saving income falls in high rate band. Applicable tax rate in high rate band is 40%. Let's see how much saving income falls in high rate band. The total saving income is 30. Out of that 3,500 we have taken in the nil rate band, then 9,770 we have already taxed. So how much is left? 30 minus 500 minus 9,770. I'm getting 19,730. I'm getting 19,730. On this 19,730, we will apply 40% because basic rate band is utilized fully. Higher rate, saving income, 19,730 into 40%. 7,892. If you just add 500, 9,770 and 19,730, you'll get 30,000 of the saving in 30,000 saving income which we have tax. Okay, great. Now we'll move towards dividend income. Number one, the rule number one which you need to remember. Dividend income is taxed at the end of all other sources of income. Number two, irrespective of tax paying status, Finance Act 2024 says every individual gets nil rate band £500 for its dividend income. So it means nil rate band dividend income, which is 500, obviously 0% is 0. The total dividend income is 10,000 out of 10. We have taken 500 in the nil rate band. So remaining 9,400, remaining 9,500 obviously falls in high rate band because basic rate is fully utilized. Higher rate dividend income. Total dividend income is 10 out of 10,500 we have taken in the nil rate band. So the remaining 9,500 obviously falls in higher rate where applicable tax rate is 33.75%. And these tax rates will be given to you in exam, okay? So if you are finding any difficulties in memorizing these tax rates and limits, don't worry at all. They will be given to you in exam. 9,500 into 33.75. Students, I'm getting 3,206.25. So leave that 0.25. Just take 3,206. Let me recheck. Yes, let's add all of them. 5486 plus 1954 plus 7892 plus 3206. I'm getting 18,538. That is the income tax liability. Let me recheck. 5486 plus 1954 plus 7892 3206. That's great. So students, in today's class, I think you should have observed that we did discuss how to calculate income tax if someone is having non-saving and saving income, plus if an individual is also having dividend income. So what are the tax, how to apply tax rate on dividend income? So far, we have not used the starting rate band for the saving income. If when that starting rate band comes into the action and how do we use that as starting rate band, we have not discussed that. Plus, let me show you one thing. How will you utilize the personal allowance? Non-saving income, saving income, dividend income. So personal allowance is used like this is the sequence of using the personal allowance. There's a possibility if you come across a question where there's no non-saving income. Let's say individual is having only saving income and dividend income, then from where you are going to deduct the personal allowance, the sequence is in front of you now. Personal allowance, first non-saving, then saving, and then dividend. When it comes to applying tax rates, always we tax first, always. We tax first non-saving income, then we apply tax rate on the saving income, and finally we apply tax rate on the dividend income. Don't forget this sequence, always. First, you have to apply tax rate on the non-saving income, then we go for saving, and finally we go for dividend income. And all these tax rates, they will be given to you in exam, and you are studying Finance Act 24. The variant is UK. Your lecturer is Abil Ahmed. See you all inshallah in the next class in which we'll be discussing, we'll be diving more into the detail of income tax liability calculation. After that, we'll be slowly and gradually introducing proper topic as well. But right now, the entire focus is you should become in a really good position to calculate income tax liability. So thank you very much watching this lecture. So see you all inshallah in the next class. Thank you.